Look, I'm not going to lie to you. When I look at the Bitcoin chart, I'm absolutely terrified. I'm terrified of 3 or 4 or 5 risks that are about to come into play into the market. And I'll show you in a second why I'm terrified. But the last risk, the one that I'm going to discuss at the end, is the one that I'm most terrified about. I'm not kidding here. This is not clickbait. I really am terrified about a certain risk. I'm seeing some certain cracks in the market, and I need to show you exactly what they are. So 4 or 5 things that terrify me. Number 5 is very, very, very scary. Let me show you why I am making the show today. So I'm making the show today because when I look at the Bitcoin chart, so this is the Bitcoin chart, and as you know, we were in this bear flag, and there's no doubt right now that this is looking more like a bear flag than anything else. Now, the thing with bear flags is that usually they break down, specifically in bear markets. If you look at the previous bear markets, which I will, let me just get this and get this. Okay, okay, so if you look at the previous bear markets, what you can see is that generally the bear flags break down, and they can break down just after they've hit the 200-day moving average. And what worries me, and maybe you can call this the first risk, but it wasn't going to be. So let's call it 6 risks. What worries me about the bear flag here, what worries me about this is that this bull market is this bear market is starting to resemble all the other bear markets. And I'll show you what I mean when I say starting to resemble all the other bear markets. The first thing is we have this bear flag, and the bear flag gets rejected off the 200-day moving average. There it is again in 2021. We had the move down. We went up. That was the bear flag over here. I'll quickly zoom in for you guys. That's the bear flag. You can kind of see it over here. If you want, I'll be a little bit more diligent and I will draw it for you. It looks something like that. Okay, something like that. This is what you call back of the napkin chart. So that's the bear flag. It went up there. It touched the 200-day moving average, and then it broke all the way down. And it looks like, at face value, that might be happening again right now in this bull market. That's not the part that terrifies me, but I do want to show you that this bear market does look exactly like all the other bear markets. This is the number of green months that you had in certain bear markets. So in this bear market, which was the 2014, 2015 bear market, what you had is you had 1 green month here, then you had 2 green months here, then you had a green month over here. In the 2018, 2019 bear market, you had 1 red, 1 green, 1 red, 2 red, then 1 green. Here you had 2 green ones, and then 1. We've just had 2 green ones, and then maybe we're starting to go back to exactly what it looks like. From a fear and greed point of view, if you look at the previous bear market, what you can see is that the fear and greed rejected off the 50 resistance zone, right? So we've been in extreme fear for a long time. We had a recovery last month. We had the green month, and we rejected at the 50. And right now we seem to have rejected at the 50 again. That's the 2021, 2022 bear market over here. And so I would say, look, this wasn't going to be the first thing that terrifies me. This doesn't terrify me. It just worries me. What worries me here is that we are getting, that this bear market is resembling the 2 previous bear markets before that. And if that's the case, the part that worries me the most is the fact that in the previous bear markets, only after we kissed the 200-day moving average, then we got the actual real move down. So if you look at the first move down, that was when Bitcoin went to like 70,000 or 69,000. That first move down was, you can call it to about here. It started to consolidate about 40% down. The next move down was much bigger. So the next move down actually took us down 67%. So right now I'm asking questions. I'm asking myself, what could happen to the market to take us down 60 or 70%? In fact, we don't actually have to go that far. What could take us down to the bottom of this wedge and to eventually break this wedge down? What could happen to the market right now that would give Bitcoin such a massive price shock that when we get there, it would break down that wedge? And that's what I want to talk about in the show, because I've got 5 things that I think either combined or individually could actually do that. So, welcome. I forgot to welcome people. I went on a rant and I forgot to welcome people, Hardest. Welcome. If this is your first time here and you don't know who I am, I'm Cryptomanran. I'm here every single day. I bring you guys, I think, the best alpha per minute show on the internet right now. If you're not subscribed, subscribe. If you are subscribed, then your job is, someone says Sheldon is still bullish. Sheldon only knows one mode. That's bullish. I had a chat to him earlier. I said, if you want to be bullish, go be bullish stocks, because that's where the stocks, where things are actually happening. If you are here, do me a favor. Smash the like button, because I wasn't here last week for a few days. So the algo forgot my name. It's like that girl that you go out on a date with, and then you phone her and she doesn't answer your calls. It's the same thing. She forgets your name, forgets your number. So you see, the algo forgot my number. So I need you guys to smash the like button because that helps me get helps me get the distribution. So what are the risks that terrify me? And why I say I'm terrified is because my base case now is that we break down to the bottom of this wedge, which will take us down to like 71,500 or 72. And then we could break down actually way below it. What are the things that could actually get us there? I want to bring these risks to your attention. These risks terrify me. Literally, these risks terrify me, and I've got to show you what they are. There are 4 or 5 of them. The first one is a pretty simple one, and it actually revolves around Trump, right? So Trump terrifies me. This is what Ben Kahn tweeted last night. He said, if this Trump Bitcoin market feels different, it is because it is different. That's the last Trump bull market, and this is what happened since Trump came into power this time. Ironically, here Trump was against crypto, and here Trump is actually for crypto, believe it or not. Now, what worries me is not this chart. What worries me is that I think Trump's lost control of the markets, and that really, really, really worries me. Why do I say that? Because if you look at the treasury yield, the 30-year T-bill, now you've probably seen a lot of people talking about this, and we spoke about this yesterday on the show. But what you can see is that the 30-year T-bill rate is going higher and higher and higher. It had a very big green candle 2 days ago. Yesterday was pretty flat, and today the 30-year treasury bill is up again. The interest rate on the 30-year T-bill is up again. This means that people are commanding more money to lend money to the American government, which effectively means that these people are worried about inflation, which effectively means that these people are worried about the war, right? So let's talk about what's worrying me about this. Generally, when the T-bill rate goes up, Trump intervenes. Now, when I say Trump intervenes, he doesn't come into the market and intervene in the market. He intervenes by giving us good news, tweeting good news, changing the perspective. Whatever he was doing before that was driving the T-bill rate up. Like, if you think about the tariff saga, last year's tariff saga, when the T-bill rate actually went up, what did Trump actually do? He started to loosen the tariffs, and then the T-bill rate actually started to go down. So generally, when the T-bill rate spikes, Trump intervenes. This time, Trump intervened. And what he said was, he came out and he said, I've been asked by the Emir of Qatar, I'm not even going to try and mention his name, Tamim bin Hamad Al Thani, the Crown Prince of Saudi Arabia, Mohammed bin Salman Al Saud, the President of the United Arab Emirates, Mohammed bin Zayed Al Nahyan, to hold off on our planned military attacks on Iranian Republic, which were scheduled for tomorrow. It's that serious negotiations are taking place, and that, in their opinion, as great leaders and allies, a deal will be made, which will be very acceptable to the United States of America as well as the countries of the Middle East. So what is Trump basically doing here? He's telling the market, look, we had an attack planned and we are stalling the attack because we believe that there's going to be peace talks. Now, if Trump does that, what you would expect is you would expect the markets to react. And how do the markets react when there's peace? Well, they say, okay, there's going to be peace. The oil prices are going to come down, and therefore the inflation is going to come down, and therefore the 30-year T-bill rate is going to come down. Didn't work. 30-year T-bill rate is going up only. So it looks like Trump's lost control of the markets completely. He reiterated this yesterday at a talk. Just listen.
Well, other countries have come to me and they've said we were getting ready to do a very major attack tomorrow. I've put it off for a little while, hopefully maybe forever, but possibly for a little while, because we've had very big discussions with Iran, and we'll see what they amount to. I was asked by Saudi Arabia, Qatar, UAE, and some others if we could put it off for 2 or 3 days.
I mean, the irony here is that, I think that's Mark Cuban, isn't it? It's Mark Cuban on a Ozempic, I think. No? I think it is Mark Cuban on a Ozempic. And he backed Kamala. Do you remember that? In the elections, he actually backed Kamala. Anyway, he's now standing behind Trump. So Trump is talking his game. He's talking the markets down, and the bond rates aren't responding. Okay. So that is a risk for me, that Trump has lost control of the markets. You want to see another thing that shows that Trump has lost control of the markets, or that Trump and 𝗏𝗏𝗏 have lost control of the markets. Here, 𝗏𝗏𝗏 is saying the US Treasury is issuing a 30-day temporary general license to provide the most vulnerable nations in the world with the ability to temporarily access Russian oil currently stranded at sea. So what he's saying is they have unsanctioned Russian oil. Okay, just think of how desperate they need to be unsanctioning Russian oil. Like let's just cast like just think for a second here. They are unsanctioning Russian oil. What would you expect to happen to the oil price when they unsanction Russian oil? You expect the oil price to go down, right? That's what happens when you unsanction. You basically say to Russia, to people, they can buy Russian oil. What did the oil price do? Well, it went down. This is the 4-hour chart. It went down to 103 and then immediately bounced back. I mean, sorry, it went down to 105 and then immediately bounced back, right? So it looks like that Trump and Bessent have basically lost control of the entire market, right? They've basically lost control of the market. And that's the first risk for me. The second risk, and remember, I'm going to show you the risk that terrifies me the most at the end. And the one that terrifies me the most, I don't know what happened. I don't know what happened there. I believe that risk is the one that's going to take us below the wedge here. And we'll talk about that at the end. So the second risk for me was this thing that was published by the 𝗕𝗂𝗓𝗓 leader. You know that we've been very stressed about inflation, right? What have we been stressed about? We've been stressed about the fact that we're in a war, oil prices are up, and inflation is going up. The problem is that inflation is a lagging indicator. And so the problem is that even if the oil price starts to come down now, all those high value items are still in the stores and will continue to be in the stores. And the inflation reading is done backwards. In other words, the previous month. And I warned you guys that one of the things that I was most concerned about is that we go towards the midterms and the inflation is still high. And if the inflation is still high in the midterms, and then you can have a Democrat clean sweep. They win the House and they win the Senate. Then we've got a problem because then they become, let's say, crypto unfriendly again, right? So what's the problem here? The problem is that right now, what 𝗕𝗂𝗓𝗓 is saying the US CPI inflation is on track to exceed 5% as early as this year. Over the last 6 months, CPI inflation has averaged plus 0.4% a month. And if this trend continues year on year, inflation pace is set to surge to 5.2% by the midterms. So what happens here? We get inflation that keeps going up because of the war and because of everything else. And you can see it. You can already see the inflation creeping up. Remember, we spoke about CPI. CPI was only at 3.8%, which was quite high. But then the problem is we got PPI. I don't know if you guys remember, but we got the PPI reading. And that PPI reading was at 6. And we said that the PPI, the producer price index stuff, flows into CPI. So what is PPI today will be CPI in a couple of weeks. Now, here's the problem. The problem is that in 5 months, we're going to get CPI at 5.2%. Now, I don't care who you are. Even if you're 𝗕𝗏𝗏𝗡, you're not going to be able to reduce rates when interest rates, when inflation rates are 5%, right? And so every day, the market is now going closer and closer to forecasting an interest rate hike as the next move of the Fed. And that worries me because that's going to slow down markets a lot. So that's the second thing that worries me. The third thing that worries me is AI. And the fact that AI stocks are overheated. And because AI stocks are completely overheated, I'm kind of worried that we're going to get a little bit of an S&P 500 correction. The canary in the coal mine is South Korea. So if you look at South Korea is a very, very smart nation, but also they love leverage and gambling. And, you know, they're very exuberant. Let's call it, let's use the word exuberant. Is that the right word? I mean, I'm going to just call it what it is. The South Koreans are basically degens. Like, they're all degens, right? So this is the 𝗕𝗂𝗓𝗓. The 𝗕𝗂𝗓𝗓 is the South Korean stock exchange. I wanted to show you something. The South Korean stock exchange is up this year to bottom to top 95% this year. We're only halfway through the year, not even. It now came down in the last 3 days. It's come down 10%. Now, I read this as well. It says that Koreans are cashing out their insurance policies and dumping it all into port max leverage into the stock market. South Koreans are cashing out of insurance policies and saving deposits, chasing higher rates of return by putting it into the stock markets. We know how that ends, right? We know how that ends. It ends with a devastating market crash. Why is the South Korean market running? 2 stocks, actually. Samsung, and then there's another one called, I think it's called, what's it called? Researchers, there's that stock in, I think in Korea. It manufactures AI components, effectively. And that's why the index is up. that got me thinking about potentially a bigger AI market correction. Now, I don't know how many of you know this guy. His name is 𝗙𝗘𝗔𝗧𝗨𝗥𝗘𝗗. This is the guy who used to work for OpenAI. He's 24, 20, he must be older than 24. He must be 25 now. I think he turned $200 million into $15 billion or something like that. So he's an ex-OpenAI researcher who fired a warning that China could steal the AI models. He turned $225 million into $5.5 billion in 12 months because he read the AI bubble. He read the AI app so well. Now, wait, Paulo has just sent me something. When Paulo sends something, you have to read. Okay. He said, okay, very good, very good. So what did he read the AI app so well. And now what you've realized is that he is taking put positions on the AI revolution. He's taking put positions. A put is an option to sell a share at a certain price at a certain point in time. You would buy a put when you are bearish on the market. You buy a put. So if you're bearish on Nvidia, you buy the option to sell Nvidia stock at a certain price at a certain point in the future. So for those of you who don't know what puts are, let's just quickly look at Nvidia. So let's say that Nvidia is trading at $221 today, right? It is trading at $221 today. That's the Nvidia chart. If I wanted the right to sell my Nvidia stock at $221 at a certain point in time, say in 6 months, I would buy a put. That means that if Nvidia goes down, I can still sell my Nvidia at $221, but I have to pay for that. That's called a put. Now, what you can see is that Leopold went, is that how you pronounce it? Leopold, what he did was he went and bought puts. Now, where did he buy puts? The Van Eck Semiconductor ETF, Nvidia, Oracle, Broadcom, AMD, Micron, Taiwan Semiconductor. Do you recognize these names? These are the pillars of the AI revolution. And what he's done is he's basically taken puts on all these positions. And so one of the things that could bring us below the little bear flag, one of the things that could take us below the bear flag is that the AI revolution or the AI bubble or the AI tech bubble actually pops. Now, I'm going to make a video and I'm going to drop it on Crypto Insider, maybe even today. If I get time, I'll do it today, which will show you exactly when the stock market is going to crash. I really, really, really believe that you should watch that video. We recorded it earlier, 𝗙𝗧𝗓. What do you think of that video, 𝗙𝗧𝗓?
Very, very interesting.
𝗙𝗧𝗓 says it's very interesting. Anyway, let's go back to it. So, he's gone bearish. Now, remember that tomorrow, Wednesday, is Nvidia earnings, right? We're getting the Nvidia earnings. If Nvidia misses earnings, now they haven't missed earnings for a long time. If you look at the Nvidia chart over here, estimated earnings, they beat. Here they just missed in May last year. Beat. Just missed in 2022. You see what I'm saying? So we do have Nvidia earnings tomorrow. Tomorrow, Nvidia earnings. If Nvidia earnings are bad, Leopold's puts come into the money, basically. But I don't think he's holding them for the short term. I think he's holding them for the very long term. So that's the next thing that can take down this market. The next thing that can take down this market is the AI bubble, or even just, let's not call it the AI bubble collapsing. Let's just say Nvidia reporting bad earnings. If Nvidia reports bad earnings, the S&P goes down. The S&P goes down, it starts a spiral, Bitcoin goes down with it. Where does Bitcoin go? First stop, bottom of the wedge, 71,000. We break down below this wedge, I'd say 45,000 is my next target, unfortunately. Hopefully it doesn't go there. Hopefully it doesn't go there. Hopefully. But if it does, we'll be there to catch it. All right, let's go to the risk that worries me the most of all the risks. The one risk that could take us all the way to the bottom of this wedge and even maybe below. That risk, unfortunately, is Michael Saylor, MicroStrategy, and STRC. And I want to spend a little bit of time talking about that. And the reason why I want to spend a little bit of time talking about that is because this is STRC. STRC is now, or was trading this morning, at 98.5. Now, what does it mean when STRC trades below 100? Well, when STRC trades at 100, then Michael Saylor can sell STRC stocks and use that money to buy Bitcoin, right? Now, why does this thing trade at 100? There's no real reason why it should trade at 100, right? What they do is they offer investors a yield. They offer investors a yield of 11. You can see the yield keeps going up and up and up. And as they increase the yield, so does the price go closer and closer and closer to 100. So basically, just think about it like this. This trades at under 100. They increase the yield, and then people buy it back up because they think they're getting a dividend, and that dividend is equal to what investors want to keep this thing at 100. The thing is that STRC is not pegged to 100. You cannot redeem it for $100. It's only worth what the next buyer in the market is willing to pay you for the STRC. Now, some people on our team, I'm not going to mention names because I think it's very embarrassing, they're trading this. They're literally buying STRC for 99.88 to make 1% if it goes to 100. But they're not looking at the risk that this thing actually goes down to 80, 70, 60. Now, you may say it can never go down to 80, 70, 60 because it's pegged to 100. It's not pegged to 100. STRC is not pegged to 100. Every time the price goes down, they increase the yield. Now, here's the problem. The more they increase the yield, the less attractive this instrument becomes. Why? Yes, it's cool to get the short-term yield. The problem is it's almost like a Ponzi. And the reason why I say that it's almost like a Ponzi, and you've got to listen very carefully here. Imagine Saylor says, okay, this thing's not trading anywhere near 100. Let's increase the yield to 12% or 13% or 14%. What it shows is that it shows that the market has no appetite for the product. And it means that Saylor will have to sell more and more and more Bitcoin to actually fund the dividend. Okay? Now, what worries me here is that if you look at what happened last month, STRC only got to 100 4 days before the dividend date. 4 days before the dividend date. My concern is that at some point, STRC never goes above 100 again. Or STRC crashes to 60, 70, or 80. You can already see that it's now lower than it's been in quite a long time. Like it hasn't been lower since since February. What happened in February? There was something big must have happened here. Researchers, what actually happened in February and in December? So what worries me here? What worries me is that there's no reason why STRC should trade at 100. It only trades at 100 because they keep increasing the yield to get people to buy more STRC. The yield started at 9, then went to 10, then went to 10, 10.25, 11. So eventually, if Saylor wants to keep this thing at 100, he's going to have to increase the yield to, I don't know, 20, 30, 40. In which case, it becomes absolutely ridiculous. My big concern, my very big concern, and I'm not the only one who has this concern. So this guy says, he says, STRC is hitting an inevitable structural demand. Demand exhaustion and diminishing buyer volume over the last month have left it defenseless against post-ex-dividend selling pressure. Why? Cash reserves are bleeding fast, now down to 15 months. The weight of scale-driven dilution and looming BTC sell requirement is finally closing in. In other words, it's almost inevitable that Saylor would need to start selling Bitcoin. The HODL forever narrative is now gone, right? Because Saylor's going to have to start actually selling Bitcoin. Bitcoin isn't performing well. There was also this article which said, is STRC Bitcoin's path to $1 million or its biggest risk? I am now leaning towards the fact that STRC is Bitcoin's biggest risk. Why? MicroStrategy owns about 5% they own about 900,000 Bitcoin. 900,000 Bitcoin is about 5% of the total, 4% of the total Bitcoin that will ever be in circulation, but it's about 6 or 7% of the total Bitcoin that are not owned by Satoshi or lost wallets. So it represents 6 or 7% of the liquid Bitcoin. Here's the problem. Right now, the instrument that is being used to raise money is this thing called STRC. When it gets to 100, Saylor sells them at the market price at 100, and he uses that money to buy Bitcoin. As you can see, it's starting to move further and further and further away to 100, and the days that it actually trades towards 100 because that's when you're actually getting the dividend, right? If you're holding it at the 15th of May or at the 15th of June or at the 15th of July, you're actually getting the dividend. If you hold it at the 15th, you get the dividend. If you hold it at the 16th, you don't get the dividend. Now, what you can see is that last month, it only traded at the 100 4 days before. It might never trade at the 100 again. There's no reason why this thing has to be pegged to $100. And if Saylor wants to keep raising using this instrument, what he's going to have to do is he's going to have to keep increasing the yield. And that's the part that terrifies me, right? This is the part that terrifies me. In my ideal world, I mean, I know we're not supposed to say this because we're all supposed to worship Saylor, and I know, but I think I'm calling a spade, and I think I'm calling it. Yeah, MicroStrategy can still sell stock. How much demand for the MicroStrategy stock is there going to be when STRC can't raise capital anymore? So right now, in my ideal world, Saylor stops buying, and the Bitcoin price continues to go up with Saylor stopping buying. What worries me is that he has to keep raising, and eventually there's going to come a point where the market says, you know what, this guy's so desperate, he's willing to offer 15% or 20%. He's willing to offer 20%. He's willing to offer us 20%, and that's going to scare the market away. How many of you in the chat, let me know in the chat, how many of you were here in 2021 and 2022? Just give me like a yes in the chat. Give me a yes if you were here in 2021, 2022 when Neuner was around. Let me know in the chat. Let me know in the chat if you were here when Neuner was around. Yes. Mohammed was there. Triple Money was there. Yes. I remember you guys. Phil Beavis was there. The 𝗕𝗶𝗁𝗘, but then you must have changed your name because I don't remember you from then. Clicker 1017. Yes, so you were all here. Do you remember this thing called Neuner? Do you remember when Neuner used to offer people 20% on the Terra stablecoin, right? And remember that you could you'd buy that if the stablecoin UST used to drop below 1, people used to buy it back because of the arbitrage mechanic. To me, this is obviously this is backed by Bitcoin and their shares and stuff like that. But what worries me is that the STRC will just depeg from 100. And when STRC depegs from 100, the market will start to panic that Saylor is no longer going to be buying. And if the market starts panicking that Saylor is no longer going to be buying, then you know what's going to happen. That's going to push the price of Bitcoin down. And when it does push the price of Bitcoin down, then that's the one thing that can get Bitcoin to break below this wedge, right? I hope it doesn't happen. But unfortunately, when I look at all the writing on the wall, last month, there were only 4 days. In March, it was 3 weeks prior. Last month, it was only 4 days prior that it depegged to 100. What if we have a month when STRC doesn't go back to 100 and Saylor doesn't buy, and the market starts to get a fright that Saylor's not buying anymore? What happens then? I mean, I leave it for you to work out because you people are smart people. If you are really, really smart people like you say you are, then I want to show you two things. The first thing is we have a free newsletter. You should sign up for our free newsletter because you're smart and you know that anything that you can get for free. Then I want to show you two things. So the first thing is we have a free newsletter. You should sign up for our free newsletter because it says these 4 things terrify me about Bitcoin right now. You should put like 2 exclamation marks. It just makes it feel like, it's like it's coming from the soul. Okay, so if you're smart, there's a free newsletter here, right? Free. Imagine getting all the information. Today in the newsletter, we talk about how the SEC is actually publishing guidelines and actually moving towards tokenized stocks, backing tokenized stocks. Also, we are talking about, is Wall Street talking about hijacking crypto? And this is about the bond yields. It's a free newsletter. I'm not asking you to pay anything. Just sign up. If you are really smart, then you'll go to BTCC, which is an exchange, non-KYC exchange, so you don't have to worry about it. They've got that 10% deposit bonus promotion again. You know that one where you deposit, say, $10,000 or whatever the number is, you automatically get $1,000 because it's a deposit bonus. You trade the $1,000 and then you withdraw your $10,000 and that's the end of the trade. Everyone knows how to do that. Non-KYC, do it as many times as you want. Let's see, Paolo is sending me stuff here. When Paolo sends you stuff. Yeah, okay. I've already spoken about that, bro. Oh my god. I'm gonna kill the designers, eh? You wanna see what our old thumbnails used to look like? Yeah, I'll show you what our old thumbnails used to look like. My God, we've come a long way. Let me show you. That is what our old thumbnails used to look like. I mean, how's that suit? How's it's look like? Look, how's that suit with like the polka dots on the like? Actually, it's not a bad like hanky with the polka dots, eh? And that's the old Banter logo, because Banter was supposed to be a radio station, so that was like the microphone and stuff like that. Saylor is different than 𝗙𝗘𝗏 is. He definitely is. Sure, we've come a long way. Do you want to see something really funny? Let me show you something really, really funny. Do you want to see like how we started Banter? Like, it was just me and Fred, and I'll actually show you. I think that was actually like, yeah, I'll show you how we started Banter. My first show. It was so bad. Yo, it was a terrible, terrible show. It was so bad. Except, yeah, let's go live. How do you go back like years? Because otherwise we're going to be here for like hours.
You're going to have to search a title.
There's no way I can search a title. There's no way I can. I'm talking to you like, okay, let's see. Maybe we can get there. Maybe we'll get there. You'll see the old shows. The first couple of shows at Banter had like these big headphones on, and I mean, we're going to be here for years if I carry on scrolling like this. It's literally scrolling down 1 month at a time. Okay, well, I'll show it to you tomorrow. It's like literally the most embarrassing thing in the whole world. Literally the most embarrassing thing in the whole world. All right, my friends, I shall see you guys again tomorrow. Remember the BTCC special. That's only for 24 hours. The free newsletter is free forever. We're never going to charge you for a newsletter. We'd be idiots to charge anyone for a newsletter. Someone says, I miss Fred. I also miss Fred. Good guy. Oh, okay, wait. Don't end the show. Make a poll for me. Make a poll. How many of you DJs are actually poker players? Because if you are poker players, don't miss tomorrow's show, okay? How many of you play Poker Stars or like anything stars, poker on a table, online poker? Make a poll immediately. Do you play poker online? Because tomorrow, in video earnings, yes, but tomorrow, listen to this. I'm going to show you something that will blow your mind if you like poker. So whatever happens, if you like poker, if you like poker, log on to tomorrow's show. I'll see you guys again tomorrow. Until then, that was quite a Freudian slip, that, eh? Okay, trade well, my friends. The poll's in the bottom. Comment on the poll in the bottom.